ICS, War Room ICS 14. Trainee Alan Vergara.
Hello.
Hello, we're back.
Yes, sir.
Here we go. Second session, back to back, ICS, number 14. Ready?
Ready.
Perfect. So we were discussing Nike on session number 13, and we clearly identified levels to consider based on price rotation. You saw how we took together the rotation during 2019 and how we subdivided such and created a full range. Now, we're going to move into another company that you may know, and I'm going to take this time to look at Coca-Cola, the Coca-Cola company. And we're looking at the monthly chart. Now, what we're going to do is to apply the exponential moving average 50 period. We're going to use typical price, high, low, close, divided by 3. Okay? And we're going to plot it into our chart. Here we go. Now, why am I doing this? As a technical tool, applying this exponential moving average will allow you to know where is the price. Remember, as long as the price is above the moving average, we buying. We want to look for buys. As soon as the price is trading below such moving average, then we look for sales.
Sell.
Simple methodology. There's nothing difficult about this. And you can see, very specific. See when prices, they gapped here in this example. And of course, everything is beautiful looking at the past, but we need to react into the now. But just as a reference, prices gap to the downside, they make a small pullback, they stay below the moving average, and then they crashed. Then prices start climbing up. I can easily see here by eye, there is a trend Fibonacci. This is why I continue. But then you see how prices start climbing up. They found support at this exponential moving average. They continue. Pretty simple. Now, what is the price doing? The price clearly is looking to settle and gravitate around the 50 exponential moving average. Now, we need to have an idea, where do we want to buy? This is very important.
Our entry point.
Our entry point. How are we going to do that? Well, why not applying Trend Fibonacci? Do you see the pullback here? Do you see this pullback, this area?
Yes, yes.
Okay, so if I take it from the base, okay, and project, this is my first Trend Fibonacci. Prices move all the way from $37 back on the first half of 2018, all the way. They found support at 38.2% Fibonacci, $44. And then they continue all the way up. In this case, I can show it to you on a big signs. This Trend Fibonacci has been completed. Do you see it? This Trend Fibonacci was completed 1, 2, 3, 4. Here is completed. It was completed 4 months after the entry, when we found price support at 38.2% Fibonacci, $44.80. That's what it took. It took 4 months to be completed. Pretty simple. In that instance, we're looking at the price move $11. So pretty much that was about 25%. A 25% return on 4 months. Now, would you like to make 25% on equity, Alan, or would you like to make 100, 200, 300, 400, 550% with call options?
I would rather stay with a call option.
Absolutely. So the trick is having this information, understanding this, looking at this pullback, then you know how high the stock may climb based on this projection. And that
Yes.
gives you the capacity to know which call to look and what to look.
10%.
The 10% deviation. That 10% for
Yes.
you, in that case, at the time, if we just to use the past as a quick example, not as we want to know. We know that this works all the time. This gives us a mapping, the mapping that we need to make educated decisions. And from this level, 44.70, or 10% will put us close to 50. And that's it. Now, notice that actually this level, this 10% deviation, variation, it's the first target on the Trend Fibonacci technique. It's close to the zero level, which is right here. Okay. That was completed. So at that time, when you see prices moving into the pullback, yes,
the 10%.
Yes, here you look for the 10%. That will put you somewhere around 49 or 50. You can pick the 50.
Oh, okay. Yeah.
And then you know that it will take some time, but you have the expectation that you can easily see the price moving into that direction.
Yes.
Because you have the mapping provided by applying Trend Fibonacci. Now, if we remove all this, the stock once again, it's making its way back for whatever reason. So we take from the pullback.
Retracing. Yeah.
It's retracing. And where do we find it? Do you see it now?
At the 61.
Exactly. And that 61, it's powerful.
Yeah.
It's a really powerful level. Now, we also know something else. We're expecting the Christmas rally.
Yes.
We're expecting to see how the S&P 500 still has an opportunity to move up all the way to 3,200 and something and change. 320 and 32.17. So we still have about 50 points, 50 to 60 points on the table. Now, of course, we do have other ideas on the table. But if we were not to have ideas on the table, I would have some interest in see what may happen with, and we can track with the Coca-Cola calls, and it will be a 5%, 55%, that will lead to 50. That will take us to 50 to 50, 53. Probably. I will be looking to know what can happen with this one. So I will do a quick exercise with you. Let's go to Old Nesca, and let's do a quick exploration on Coca-Cola.
Because 53 is the within the 10%.
Correct.
Yeah.
It will be more like a 5%.
5%.
Yes. So we have the Coca-Cola Company, December 19, and we're trading.
Are you sharing that?
Yes, let me share with you. One moment. What about now?
Yep.
Great. So there's Coca-Cola. This Coca-Cola, the 50. It's not updated. 1 second. Oh. This one is not updated compared to the it's not updated compared to the chart. That's interesting. Yeah.
I wonder why.
Yeah. See the call. What call could be of interest? We just double check trading view.
Okay.
1 second. See. Want to make sure. KO. Coca-Cola, New York. This is the chart. The chart's not updated because Coca-Cola, in fact, is trading at 54.42. It's fine. It's kind of fascinating that. But if that's the case, let me take a look at 54, 5%. That will put us $57, $58. Call 28. 55. Okay, look at this one, for example. Do you see this Coca-Cola call? It has 42,446 in open interest. Do you see that?
Yes.
Now, the strike is 55. According to this, on Friday, we close at 54.42. So we'll need to be at 50.
It's in the uptrend.
It is in an uptrend. It has this one has the massive volume, and it has to close, has to get there. Look at the price rotation. The contract low was 5 cents, contract high 377.
Yes.
Like
it's at the very bottom, like almost at the very bottom already.
Yeah, but notice that the volume there was 3,544. Okay.
Yes.
I'm gonna send this to you because we're gonna keep an eye on this one. Because
very
someone,
liquid.
Someone on Friday made 100% trading on the day that option. I will explain why. 14 cents. I'm saving this information. Do you see the day low? 6 cents.
Yes.
The day high?
17 cents.
Someone made 100%.
Yes.
And then the spread is 13 by 14. It's only 1 cent.
1 cent. Yep.
So someone made 100%.
Yes, sir.
Yeah, so this is definitely here.
Wish it was us.
Yeah, well, as we get more and more practice, it sure will be
yes.
You probably, I'm telling you, at some point will be kind of like, Jose, I beat you up. I'm beating you, Jose. I just made 300% in your face.
No, every time I find something, I will let you know immediately.
I will love that. That will be great. But we will keep an eye on this for the purpose of the follow-up and what we're analyzing today, okay? And this also is a case of, are we going to be with this in the money on the 19? That's what we want to know. It's very important for us, okay?
But we're just putting it on our watch list, but we're not trading it.
Yes, we're all on the watch list for the purpose of the understanding.
Exercise,
Yes, of the exercise. Going back to this chart of Coca-Cola, which surprisingly is a little bit off. Taking this consideration.
And that has nothing to do with insiders.
We're not looking at insiders right now. Yeah, we're focused on the
Trend Fibonacci, the price rotation, and
Wolf wave. Wolf wave. Yes. It has nothing to.
I don't know. Yeah. Also, wolf wave.
I will share with you the Wolf wave. And that's why I'm leaving it for the end. Just we'll focus on that. But as you see, only with these technical skills that you are developing, you have enough evidence for you to position yourself. Because yes, you can take a 25% on the equity, but why sitting on a 25% opportunity to the upside when you know vehicles, you know that you can go for the calls or go for the puts depending on the situation and leverage your money. The number one thing that I've seen on retail traders, and this is the funny thing when it comes, they take big amount of money, $50,000, and it goes to zero. That's common. The reason why I focus on these strategies, developing the skills, is because then you can take 5,000 into 50,000. We want to do the reverse.
Yes.
Or you take your 50,000 into $500,000.
Whoa.
Now, but here's another story. So one quick story, and this is very important for your education. Publishers are publishers. They only publish content. They don't really care sometimes. And I took some time at the beginning of this year to see what was the whole thing of trading options, following insiders. So in 2017, the first year that the insider report was published by our company, the company Global Profit LLC, Market Traders Daily, blah, blah, blah. In that year, if you were to take $10,000 and take all the option trades from Ross Givens, one after another, and from the first trade, winning and then reinvesting the whole thing, by January next year, on 2019, you have an estimated of $400,000 with $10,000. $10,000 into $400,000 in less than 8 months, following all the trades one by one, winning on every one, and reinvesting everything on the next one.
Just the ones that Ross Givens
exactly
published.
Yes, yes. And I told this to the publisher. They didn't know.
Yeah, they
didn't know. No one was paying attention.
They weren't paying attention.
No one. I don't think even the clients were paying attention, because because it wasn't explained to them what they can do. And then someone will tell you, oh, that is not trading. I mean, look, if trading is about suffering, please don't tell me.
Yeah.
We bring people to trading, and a lot of people use trading as an extra. It's true, but there's also a lot of potential. But it has to be explained. You have to be trained. You have to be guided to get there. There's nothing wrong for you to take $10,000, risk money, and just go for it. Put in on the first trade, you made 100%. You take that money, you put in the next one, you made 300%. You reinvest all those $60,000, and you reinvest on the next trade. First off, at the beginning, those $10,000, you need to have the mindset that, yes, it's not nice to lose the money. But remember, it's money that it's not your day-to-day money. You don't depend on that money. So you need to know what you're doing. So, and that was the potential of the options. So the moment I realized that, I was hooked. I knew this is the way to be, because who doesn't want to take $10,000 and make almost $500,000? Do you know what that will do for your life, for your kids? And then with that money, you can help others to get there as well, because it's not an accident. Yes, Ross Givens had, as anyone, he had some patches when things are not nice, and he has some bad calls and options. And actually, I learned from him. He had one call on Tesla. He made a recommendation, and the call option was trading at $8. That thing went to $1.
Yeah.
And that's what I took and that's why I took the rule: we don't buy anything above 250.
Yeah.
It doesn't work. It doesn't work.
It doesn't. Right.
It's very rare that you buy a call at $8, $10, and it goes anywhere. You need to buy them.
It limits your capability to buy more contracts.
That's one. Second, it also limits your capacity to accelerate, because I'm going to explain this on the board. If the call option is at $8, like what happened with Tesla, okay, that Tesla trade, what happened to him is that if this actually moves into the money, the capacity to accelerate is limited. This is $8, $800. To this thing, I can move $5 more, move to 13, 14, but it's limited. Now, what happened with the case of Costco was different. It went from 245 that he recommended, it went to 30 cents. Okay?
Yeah.
But the capacity for this 30-cent option call to accelerate was huge. So as Costco moved into the money, this thing accelerated like a savage.
Yep.
And it went to $17. And that's what we're looking, the capacity to accelerate. It's very important to know. Now, looking at this to finalize this Coca-Cola idea based on what we have, the information we have in front of us, we know there's a different variation in pricing, but we're going to just follow with this one. You take the range as usual, remember, from the 0.
Are you sharing the screen to me?
Let me go back. Yeah, thank you. Appreciate it. This is the range, okay? From the 0 to the 100. And then you do the projection.
Or no, from the 0 is the one on top.
Right? Yeah, okay. One second. Let me just double check. Yes, from the 100, from the bottom to the 0, because this is going down, up. So we project from here to here. This is the 100%, and this is the end of the projection. Then we take the shape and we look to finalize the projection from our last level that we have to respect, which is the 61.8%, and then we have our target to the upside. Okay, now, very important to mention, number one rule, your first target to exit will be the 0% level. Okay,
that's the first rule.
Number two, your second target is the end of the projection. So that's your second target, end of projection. And the third rule, and the most important, in case of a pullback after you cross the 0%, the 23.6% is the lowest level where you can see prices. If prices break 23.6, it's over. It doesn't apply anymore. So what that means is you can see the stock climbing, goes here, then reverses, gets here, and then it can continue again. But if in one moment it breaks here, it's over. 23.6% is your support level as soon as you break the 0. Remember this. I'm going to repeat this for the purpose of the recording. Prices can climb, break, and activate the 0% of Fibonacci. Excuse me. As soon as prices open and close and open above the 0% of Fibonacci, you have your Fibo activated. If that's true, prices cannot go and break below the 23.6%. If they do, you invalidate the Fibonacci. But don't be surprised if prices went all the way down to retest the 23.6 and then reverse, heading all the way to hit your final target, which is the final expansion of the projection. Okay? Very important. You have those.
And we are in a monthly.
And we're in the monthly.
Okay.
Let's use another example. Let me go and I'm going to leave this here. Let's take a look at another company. Let's take a look at Cisco, another very interesting company in the year 2020. Now, what we're going to do with Cisco is pretty simple. We have here, first, let's go with 50 exponential moving average. Remember, typical price, high, low, close, divided by 3. There you go. Where are prices? Prices are above the exponential moving average. But of course, this moving average is going to offer us a valid support at, in this case, $40.60. Do you see it?
Yes.
Now, previously, you can see on a monthly chart that this 40-20, 40-60 level has been of support a couple times. How many times? 1, 2, 3, 4, 5, 6, 7, 8, 9.
Close to the 50 EMA.
Correct. So in estimated 10 consecutive times, that area has been of support. You have it here. You see it?
Yeah.
So we know there's evidence. There's historical evidence. There's something happening in this area. Okay. But now we also have very, very strong evidence. And we know that the exponential moving average is right there. Now, we need to find something extra. We need a mapping. So let's use Trend Fibonacci. Now, I'm going to go to the base. This is the base. You can see here how this is the base. Let me actually do more. I'm going to have this area. I'm going to draw this horizontal line. Okay. And then I'm going to draw this one too. And you see that prices from this point, let me draw another one. Okay. Prices move all the way to this. It creates a base. These 2 points here are $22. Sometime in August 2015, they create a double support, double bottom. You have this point and this second point, and then it goes all the way up. There is a reversal. There's a small pullback. there's a continuation, and again, there's a small pullback and goes up. Now, this particular pullback in this area comes all the way to be what previously was a resistance level. So resistance now becomes support, basic technical analysis 101. And now it goes all the way up. So I'm going to take that level as the base for my trend Fibonacci. And I can easily just go all the way up. Now, what do we see? We have, in fact, there's some evidence to think that there's a reversal to take place at 50%. But the most important, we have the confluence. Again, the double confirmation of the 61.8% Fibonacci and the exponential moving average. If I take then, based on the shape, all the area, I will be looking at this.
67.50.
There you go. Of course, what are we looking first? We're looking for prices to push higher and retest a previous high. So in fact, it's obvious that 57.50, the 0% of Fibonacci, will be our first target because it has to go back. In order for this stock to go and find new all-time highs, it has to retest the previous high, which is right here. It says 57.50. There's no signs there. Now, applying the 10% variation, you will be looking for the 50. Your 10% variation, that will be for 50, that will put you at $50. So you can be looking initially for the 50 call based on the 10% variation. But you know that
that's the 10%.
That's the 10%. But you know that you have as a target to the upside 57.50. And then you know that there's big chance that Cisco will go to $67. Is it going to be tomorrow morning? Highly doubt it. It's going to be during the Christmas rally? No way. But in a period of 12 to 18 months, positioning yourself, you know where you have to look. Now, if that's the case, we know what to expect from Cisco in 2020. So you know what you have to do. You already know what you have to do. Cisco is a buy on dips. So for example, if in January we have that rotation that I'm expecting, the bearish rotation I'm expecting to give us the opportunity to go long a lot of these opportunities, and for whatever reason, you can see it here, Cisco goes to $40, which would be a 10% drop, then what do you think is going to happen to that 50 strike call? Let's take a look at that. Let's see, where is that one now? I'm going to switch my screen, and we're going to all NASDAQ. Cisco systems. And while others keep talking about the usual Tesla and that ugly tank that he built, and people keep talking about all this media, like what's happening with WeWork, people still crying for the WeWork IPO, and people keep doing that, we focus on the money ideas. That's what we want to do.
Yes, sir.
Now, March could be an option. Let's take a look. Where is that $50? 47. Oh, that's not bad.
It's not that.
It's not bad. Look at the action. Look at the action. But let me use this one.
47.50 strike.
No, just to. I needed to change here. See if I can get it. I think I need one more zero. There you go.
How come it's not showing on the list? But you punch it in, and then
I will find you.
They're hiding it. They're hiding it from us.
Doesn't matter how much they try. I will find you.
16,000 open interest.
Look at that. Look at the volume. Look at the volume.
1,000, at least 1,000.
Exactly, exactly. And you know what? As soon as we get out of those positions, the thing is that will be too late. But
48 is attractive. 48
yeah,
cents.
that's my point. It's attractive. I
It's
think
a
actually this one can double next week. We're gonna keep
2-cent
it.
spread.
Yeah, it's 2 cents, nothing.
Yeah.
We found it. This is the one. And here's the thing. I mean, you can zero this particular company in 2020. Take a look at
Yeah.
dedicate some time studying Cisco as a whole, so you have all
Yeah.
the ins and outs. You already have the technical map, but
Yes.
this one I sent it to you. This one is the one to look at this.
I'll put it in my watch list.
Absolutely, we have to watch this. And you see, we're not looking into the past. I used some past examples to give you some benchmark to give you guidance.
Yeah.
But the beauty is on the coaching is that we look at these things on real time. And
Yes,
this
sir.
is the March 20. This is going to take some time. This has potential.
Yeah.
Full potential. I would love to see where this one will be on the next drop of the S&P. When the S&P drops 120 points, this is a sure buy on any big reversals of the S&P. Big reversal.
Because it's gonna go dive as well.
Yeah, it will take a dive, and then we want to buy it as the stock will recover. Beautiful. This is a beautiful opportunity. Really good opportunity.
Yes, sir.
So we're gonna have in the map. Okay, perfect. Let me just go back to the charts. We're gonna see if we have time for one more example, and that's with Cisco company, a stock that you probably wouldn't consider, but now you know.
So the options that we're gonna be getting involved with would be more in what sector are we gonna stay in? The options equities?
Yes,
Like
equities only.
technology or tech
Oh,
or
sectors.
biotech or
No. Excuse me. Now, I'm not into defining my trading into sectors. We're looking at specific levels. We're looking for companies that we establish based on, number one, the insiders. So we know there's a push higher. Also, the gurus, Shell Coleman, George Soros, all those big names, that we know that they have positions. Also, we have, on the third idea, we also have the earnings season. Okay, that will be a third view.
Yeah.
And the fourth will be just understanding where is the company sitting on the technical aspect. For example, that trade, once again, for example, Cisco, based on this information, we know that the company is sitting not too far from a critical reversal point. If Cisco eventually, sometime in January, reverses and goes down to 61, let me just go back and share with you. Oh, we have it on the screen. If this, for whatever reason, in January drops the S&P 500 and pushes Cisco all the way down to this level, you do know now that this is a critical technical reversal point. Not only you, but serious professional people applies this. So yeah, it may drop a little bit, but what we'll do is that we'll give you a better entry to buy the calls, because you know, as a matter of fact, that this has potential to reverse all the way to the 0% Fibonacci.
Yeah.
So your call strike 50 will be very low and will have enough time, because you will be looking to buy March. You already know that particularly that one has a big open interest. And as prices go down, then a lot of investors will be betting on recovery of Cisco. Now, again, Cisco is one of those companies. It's a little bit like a Microsoft. Look at the bullish trend. 2011. Look at that. From $12 to almost $60. 400% in 6 years, 7 years almost. Not a bad thing. Conservative, yes, but doable and strong. No one can deny that. That's Cisco.
Yeah.
A strong company.
Yeah.
So that's something to consider at this stage. And that's where you're looking. The most important is understanding when you see these big drops, the next time, I bet you, the next time you see a big drop, let's say you don't participate buying puts on the next drop of the S&P 500. When the market
Mm-hmm.
goes 100 points, let's say it goes down 200 points, I bet
Mm-hmm.
you will be smiling because you know now what to do. You don't
Yeah.
have to wait for me. You know what you have to do. And you will start looking at companies. You will start looking at names, very solid names as well,
Yeah.
because you will be looking at names that, why is Disney, for example, trading at this level? Let me see
How
if I
about
find
Apple?
exactly. How about Apple?
Apple just continues going up and up and up.
Yeah, and that kind of company, when they retrace, probably it won't be that big of a deal.
Yeah.
Remember, when you're looking at the put, let me write this down. When you're looking at the put, okay, you want to go with those companies that we already experience. We already know that they're fragile.
Mm-hmm.
Netflix,
Yeah. Roku,
Roku,
Nike,
not Nike,
not
Home
Nike,
Depot, Home Depot, for example, HD,
Home Depot. Yeah.
Home Depot, those kind of companies that are fragile, that they're
Yeah.
not reporting well.
Uh-huh.
You see, those are the ones that you want to have on the map, and then we can find others that we know that they lower their guidance for whatever reason. Okay, when you're
Uber
looking
is
at
not doing well.
but Uber, remember we have the big insider at 26, so you want to be careful
Yeah.
with Uber, and remember what I told you.
Okay.
When you're looking
Yeah.
at tech IPOs, remember after a 15% drop, it's game on. So
Yeah.
don't look at Uber as your list for shorts. It's not going to
Okay.
work because that
Okay.
company, they're fighting back. You
Yeah.
see, same like Snapchat. That's the same situation. It's fighting back
Yeah.
with the call. Now, what you want to do with the call? You want to look at companies that are in an uptrend. Okay, that they're
Mm-hmm.
not fragile. Like right now, you see Cisco in this case, they're being in an uptrend. Only if
Mm-hmm.
there's a big close below the 61.8% and also the fifth exponential moving average, then you want to consider something. But it's
Mm-hmm.
not a chance. This is not a coincidence. This is a 6-year
Mm-hmm.
bull market for Cisco. And what is
Mm-hmm.
happening now is that prices are looking for this support. Do you
Mm-hmm.
see it?
Mm-hmm.
It's massive.
Yeah.
So I'm pretty sure if I look to other tools like volume profile, there's massive volume here. So you
Mm-hmm.
will not be able to break that. But this is the kind of candidate you want to have for your calls.
Hello?
Yeah, for your calls. Can you hear me?
Yeah.
Yeah. So, and the beauty of this also is that knowing this, you will have an opportunity to, every time there's a pullback in Cisco, you will look for your 10% variation and you look for
Mm-hmm.
to add the call. And
Yeah.
sorry. And multiple times you can attack the same company with the same call strategy.
Mm-hmm.
That's the idea. That's what we're looking to do.
Mm-hmm.
And
Yeah.
you have it in front of you. Very basic. Okay?
Yeah.
Perfect.
Yes.
I'm not going to add more to this session because we already went into these two examples, and we already
Mm-hmm.
have a valid information that we can follow into 2020. Do you have any questions so far?
Mm, no.
So it was very clear, the session. You understood
Yes.
the step by step.
Yes. Very clear. Yeah. It's clear now. The first time that you've explained to me that you used the trend Fibonacci, that I was kind of confused back then. I was trying to struggle,
Yeah.
but
Okay.
as the sessions progress
Okay.
and you keep using the trend Fibonacci, it has becoming clearer and clearer every time.
Yeah, and you can see how it will add value to your trading and investing. Not only
Yeah.
not only in the short term, looking for explosive returns on the call options or put options, but also
Mm-hmm.
understanding on equities. If you were
Mm-hmm.
to take the look at the equity of someone, I don't know, someone were to ask you, you know what it's doable, you know what can be on the table. And
Mm-hmm.
again, this is a more logic mapping
Mm-hmm.
for you to trade. This is your risk, and these are the targets. And based on these targets,
Mm-hmm.
you look to position yourself buying the best vehicles, call, puts, depending on what it is.
Mhm.
That's what
Now
it is.
that's for the monthly. That's mapping the future using the monthly time frame.
Correct.
But when do we use the 4-hour chart?
The 4-hour chart will be
Like
when
for
yeah, that will be when you tell
when
me that you have $100,000 and you're going to trade $100,000 every day, in and out. You will be,
what?
yeah, because think about this: the 4-hour chart. What we'll do, and we're about to finish the recording. The idea I want to explain is this: this same information we can take it down to smaller time frames, and we have
Uh-huh.
big amount of money. You can go in out of the market for $1. But remember,
Uh,
that represent $100,000. So you probably are taking home $10,000 on that massive amount of leverage.